We have about a couple of minutes here, so we'll go ahead and get this started. This will be a recording as well, so we'll have this on our YouTube channel, which is at 9ICAP. That's 9I Capital. So now it is 12 o'clock, so we're going to go ahead and get started. So thank you guys for joining the webinar today, where we're going to be examining the impact of recent changes in tax policies, trade tariffs, and Trump administration's policies on business owners in the United States. I'm Kevin Thompson, the founder and CEO of 9i Capital Group. I'm a CFP, which is Certified Financial Planner, an RICP, which is a Retirement Income Certified Professional, and an enrolled agent as well. So the agenda today is really is twofold. We want to talk about pre-TCJA, what that actually looked like. Then we're going to talking about the continuing resolution, what the Republicans are sending through currently, which is just passed the House. And then also we're going to talk about how this policy is going to impact your business. So it's going to be very, very short, probably 20-25 minutes. We want to make sure we're hitting things really, really hard. So if you do have any questions, feel free to hit them in the chat or send them to info@9icapitalgroup.com. So some of the things we've been looking at it's important to understand that taxes, tariffs, and the current policy, the implications it's going to have on you as a business owner. Of course, recent tax reforms such as the TCJA have significantly improved businesses, especially when in regard to the QBI and all the deductions that you get to receive, the accelerated depreciation, and all of those things. Not net operating losses that you can pull forward or and things like that. So it's been very, very beneficial for our businesses and us as individuals that are in this economy, that are basically the largest part of the economy. So the Trump administration, now we have these trade policies that are coming into play, and that's going to be a little bit different. I do believe those trade policies are having a small impact on a lot of the small business owners out there because, again, we want to know exactly, and especially if you're a manufacturer, we want to know exactly what we're paying for in the future so we can make decisions today. And without having that mindset of, okay, we know what this is going to cost, what's going to happen is a lot of business owners are going to pay a lot more up front and be inflationary up front because a lot of business owners are going to go out and buy a lot of product because they don't know exactly what they're paying for in the future. So they're willing to pay for it now and know the price versus having a variable price in the future, which again is inflationary in the near term. So looking ahead, TCJA expirations in 2025. Now, I do not believe they're going to expire. As you do know, they're trying to pass legislation through to get the TCJA extended. We're going to talk about that here in a second. But again, in 2017, their TCJA impacted or introduced significant changes to the U.S. tax code. These provisions are set to expire in 2025. Like I just mentioned, they most likely won't. I do believe we should have some information here in the next month or so about what this is actually going to look like. It's a $4.5 trillion impact to the economy. So this is very, very big. It's a spending increase is what it is. But again, they're looking to offset that in other ways in regards to other legislative bodies of doing tax or spending cuts in certain areas. So before the Trump administration, the landscape of the taxes were a little bit different. As we know, there was a 35% corporate tax rate. There's a 39% individual tax rate, and many businesses face substantial tax burdens, leading to strategies aimed at minimizing taxable income through deductions, credits, and in some cases, offshoring profits. Now, the key changes under the TCJA, we had a corporate tax reduction from 35% to 21%. They're even looking to bring that even further down to 15%. They're aiming to make U.S. businesses more competitive globally. Pass-through deductions. Owners of pass-through entities such as S corps and LLCs became eligible for a 20% deduction, like I mentioned to you previously, on qualified business income. Immediate expensing. Also, businesses could immediately expense certain capital investments, encouraging reinvestment and growth. These changes were designed to stimulate economic activity and incentivize domestic investment. Now, one thing I will say is it did just that. It allowed to have business owners to keep more money in their pockets and either keep it for a rainy day or reinvest it. And again, those changes were actually impactful and still have been impactful for business owners and and lower income earners alike. So why this matters to you? So in today's dynamic economic environment, understanding tax policies and international trade dynamics is crucial for business owners. Recent changes in tax legislation and the imposition of tariffs can significantly affect your operations, your profitability, and your strategic planning. Our goal today is to break down these complex topics and provide actionable insights to help you navigate these challenges. So, by staying informed about the latest tax and trade dynamics, you can proactively adapt your business and operations and optimize your financial planning and make strategic decisions to thrive in this current environment. Now, this current environment is consistently changing. It's going from A to B so quickly. But why is it going that way? Well, let's kind of take a step back and figure out what's actually happening. So right now, the national debt exceeds $36 trillion. We have mandatory spending growth, which means that there's on these mandatory spending programs, there's 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 growth in those areas, which again, there's just very little offset in those areas. So what they're trying to do is figure out, okay, where can we cut? Where can we cut to get this national debt, quote unquote, to slow it down? To slow it down. Now they're not going to cut it, make it go back the other direction because everything that they're implementing is actually going to be positive from a growth from a deficit perspective. It's actually going to add on to the debt. So where can they slow this spending down? And what they're doing is they're going into the books and trying to figure out where the wasteful spending is. Now, what they're wanting to do is set spending caps, which again that goes to the states. There's like these block grants and things like that they're trying to send to the states, but they're also trying to balance the budget. Now, when you hear the word balance the budget, be very careful what that actually means. Because what people truly are missing with this is that, and again, this is not politics, this is just policy. If there is a group of people that have a surplus in the society, let's just say it's like during the Clinton administration, there was a surplus on his side of the fence. Well, that means inevitably, if someone has a surplus, there has to be a deficit somewhere. Now, this is just a new economic theory for me, but at the end of the day, an individual, if you have a surplus on one side, there's a deficit on the other, and then if the government's running a deficit, that means there's a surplus somewhere else, which is going to be on the private sector. So we have to be careful what we wish for, because if we're taking money out of the economy to create a surplus on the government side, that means there's less money in the private sector. So we have to be careful on that. So economic growth policies now, reducing federal spending, cutting back on government spending, especially in areas like welfare, social programs, and discretionary spending to reduce the national debt, frees up resources for private investment and growth, expanding American energy production. Of course, you heard him say drill, baby, drill. So that's going to be something they're wanting to expand. Now, that's another, again, that's a supply and demand thing. So there's not much we can possibly do there outside of just, there's not going to be where there's going to be producers wanting to produce at a lower price because it's just not profitable. Lowering taxes. They're wanting to lower taxes even further. I know they're wanting to lower it down from 21% to 15% for corporations. Deregulation in the economy. Regulation has been huge, right? Regulation, again, I know we have the DOJ and the CDC and all these other entities that are here to protect the consumer, and that's what they're there for. But in some of these industries, especially in my industry, there's a lot of regulation, a lot of red tape, so it slows everything down. Now, there's a give and take in this world from a regulation perspective, and I'm assuming they're going to find. I know it goes far right one time and far left the other. There's going to be some kind of hopefully happy medium in that world, and of course, encouraging workforce participation. You've seen that workforce participation number go down dramatically here in the last several months. I think those numbers are going to get worse and worse here in the next couple of months. But again, those numbers should tick back up once the economy starts to get a little bit better and starts flowing in the right direction. So let's talk about a couple of key reforms here. Reforming Medicare and Medicaid. Now, why am I even mentioning this? Well, it's because they're wanting to reform these because it impacts not only business owners, but also impacts retirees. So what they're wanting to do is income-based adjustments. And the reason why I'm saying this is because this is a part of the continuing resolution that they just presented, and I'm wanting to give you an idea on what they're saying in their bills that they're passing through the House and the Senate right now. So again, income-based premium adjustments, market-driven healthcare competition, and cracking down on fraud and abuse. Now, the proposed changes to Medicare and Medicaid, including income-based premium adjustments, increased market-driven competition, are expected to lead to hundreds of billions of deficit reduction over the next 10 years. Now, that's all fine and dandy. But again, strengthening the national defense, increasing funding for military readiness, modernizing military equipment, shifting resources of national security, and strengthening cybersecurity and AI defense. That's more money that they're wanting to put towards these programs as well. Also, and we're going to get to something here in a second, so I can show you some numbers. Budget deficit and tax policy. Now, this is the projected deficit. The U.S. deficit is projected to grow by trillions in the next decade, driven by government spending outpacing revenue. Proposed fixes, like I just mentioned, solutions are new tax increases, encouraging private sector investment, and eliminating inefficient federal programs. Now, we know new tax increases aren't going to happen. And of course, the balanced budget is something that we need to, like I said, to keep our eyes on and ears on, because again, if it's balanced, that means it's going to tip in favor of somebody else, or one part of the government versus the private sector. It's always government versus private sector. We don't want the government competing with the private sector. We always want the government out of the private sector, not allow the private sector to do what it's going to do, but have the government to keep its eyes and ears to protect the consumer. So that's how this government system works. Outside of that, um, here's some. Now this is where the numbers meet the road, and then we're going to get to the how it's going to impact business owners. Proposed tax policies under the current administration. So again, elimination of taxes on specific income. You've heard no tax on tips, overtime, Social Security benefits. Now, most of that's not going to happen, which are good talking points, it's good rhetoric. But again, it's important to understand this is what they're trying to pass through. New deductions, introducing deductions for interest on car loans and other personal expenses to encourage consumer spending. Corporate tax rate adjustment, they want to take it down to 15%. Now, even though these proposed changes are aimed at furthering stimulating the economy, elimination of taxes on specific income, like taxes and tips and things like that, could be something that some Republicans balk at, because they see this as borrowing money once again. If you think about it from a perspective of loaning someone money, or giving someone dollars, you're giving someone dollars that you're basically taking dollars out of the system from the government perspective. You're basically having the taxpayer fund that income, and a lot of people feel like, well, it's the responsibility of the employer to provide that income and or tips. And people think that, well, if you start putting a no tax on tips, that's more money they can make in tips, and that's less money the employer would have to say we need to give you in regards to wages. So it's just a balancing act there. But what I'm going to say, and this is where we need to kind of get where the rubber hits the road: deficit reduction targets across congressional committees. This is what came out last week, right? $880 billion of energy commerce cuts, $330 billion. This is over a 10-year period of education and workforce cuts, $230 billion of agricultural, and $50 billion of government oversight and government reform. So, the reason why I'm saying that is because if you look at just the agriculture number, there's a lot of small businesses and large businesses in the agriculture committee. And the subsidies are what is used to keep prices down in your food and your grocery store. So over the next 10 years, there's a $230 billion cut. But now the question you're asking yourself is, where's this money going? Well, the money's going here. 4.5 trillion to Ways and Means, which basically means that that's the tax cut. Now, the tax cut's good for business owners like myself. So that 4.5 trillion is going to be coming to us in regards to expansion of TCJA. 110 billion in regards to judiciary, and 90 billion in regards to increases in homeland security. Now, if you put these numbers together, that's a deficit increase. And of course, that's a deficit increase, and there's more spending that's coming on the pipe. Now, the idea is they're going to find some fraudulent spending in there somewhere to offset some of that. So that's a longer conversation. So understanding tariffs and their purpose. So the idea with tariffs, especially with your business, is that they're trying to protect domestic industries. They're trying to bring industries back to the United States because those businesses have a comparative advantage in using outside or cheaper labor. So that's part one. Part two, generating revenue. So if we're imposing tariffs, and this is just the concept. If we're imposing tariffs on goods that hit our shores, that's money directly to the government, right? Now, whether you feel, oh, it's just a tax increase and all stuff. Hey, this is not our conversation right now. Our conversation is about what is the purpose on just what a tariff's designed to do. And then lastly, of course, is political leverage. Tariffs can be used to influence the trade policy of other nations, giving a country more negotiating power, which again, you've seen that work at its finest. That's exactly what it's designed to do. Now, let's get to the reason why we're here. How are tariffs impacting your business? Majority of you, if you're in manufacturing, you're feeling that, well, I don't have a good idea on what my costs are going to be. So I'm going to buy now because I know what the cost of what I'm buying today is. So what that's going to inevitably do is, like I said, increase your costs because now everyone's doing that exact same thing and prices get bid up in each of your industries. Not to mention there's a tariff on top of that as well. So higher prices for imported goods and raw materials can squeeze your profit margins. But it's better to squeeze your profit margins today with something that is a known versus not to squeeze your future or to disregard it with the known unknown. The known unknown is I know there's going to be a tariff at some point. I just don't know what it's going to look like. Secondly, we have supply chain disruptions. We've seen it in Ukraine and Russia. We've had that come to the forefront all through this time. So it's important to understand that from a supply chain perspective, prices and the disruption of those prices are really powerful. Why am I saying that? Well, I'm saying that because if people start having tariffs in certain regions, they can just pull back from supply. And we know when there's disruption in the supply chain, prices go up. So we have to understand and be ready for these things. And of course, market uncertainty. We've seen it in the stock market. But people are saying, well, Kevin, why is the stock market not going down? Well, I have a few reasons for that. I have a few theories on that. And this is not what this call is about. But one of my theories is there is no alternative for most people. Every 2 weeks, you have people putting money into their 401ks. A nation of people just dumping money in their qualified plans, and that money's going to the stock market. That same month, you have nations of states that are buying securities and bonds and all these different things in the stock market. Money's flowing into the stock market every single month, whether you like it or not. So you have this bid that's just always there. So that's why you're seeing prices just slowly ratchet up. So here's some mitigation strategies for you business owners out there. It's important to diversify your suppliers. A lot of you wanting to work with, Kevin or Jacob or Johnny or whomever, but it may be time for us to start diversifying our suppliers so we're not left in a bad situation. There's nothing worse than building something or having materials, manufacturing materials, suppliers, and they say, you know what, we just don't have it. Well, if they don't have it, guess what happens to you? That means you don't have it. You can't put the end product together. And that becomes an issue in regards to revenue. So diversifying your suppliers where you can start negotiating with them, maybe negotiating some kind of contract saying, hey, listen, I'll get you for this. I'll buy this amount of this. Work with your existing suppliers to share the burden of increased costs. Maybe adjusting your pricing strategies. Now, a lot of you are going to say, Kevin, you know what? If prices go up, that just goes onto the consumer, and we're okay with that. Our margins are going to stay steady. Well, yes, your margins are going to stay steady, and your prices will need to adjust because you, as a business owner, cannot afford to eat those prices. We can't afford it. So what we're going to do is we're going to pass those new costs on to the end consumer, and their prices are going to go up. But the most important thing you can do is advocate for policy change. Now, if you're not happy with the tariffs, if you're not happy with the higher cost, if you're not happy the way your your clients or your people that come into your store that are being treated, then you need to advocate for change. Engage with industry groups. The ag industry right now, which I'm somewhat close to, they are up in arms about what's going on. And they have advocacy groups up and down the administration. So it's important that you find your advocacy group and figure out what you can also do to be in a better position. So looking ahead, it's essential to stay informed about potential policy shifts. The expiration of the TCJA provisions and evolving tariff policies could significantly impact your business. Proactive planning, continuous monitoring of legislative developments, and flexibility in your business strategies will be key to navigating these challenges successfully. So here are some proactive measures to take as a business owner, just an individual, just a high net worth, high income individual, because there's a lot of changes that could come down the pike, especially if you're in retirement, in the Medicare side, from a cost perspective. There's so much going on. Consult with a tax professional. Ensure you're taking full advantage of current tax benefits and preparing for future changes. If you're a business owner, review your contracts. Assess agreements with suppliers and customers to understand your exposure to tariff-related costs. From a financial planning perspective, build reserves to manage potential cost increases and invest in efficiency and great product improvement. And lastly, stay informed. Advocacy groups. Regularly monitor policy developments and adjust your strategies accordingly. Build reserves. Get in groups that are like-minded that you guys can come together, because that's where it's powerful. So here come a couple of key takeaways. Understanding the interplay between taxes, tariffs, and the government policies is crucial for business success. By staying informed and proactive, you can mitigate risk and capitalize on opportunities arising from these changes. So if you guys have any questions, like I said, this is going to be a quick one, 25 minutes. Feel free to reach out to info@9icapitalgroup.com. That's info@9icapitalgroup.com. And we will get those questions answered. I like to keep these under 30 minutes because I don't want you to get inundated with information. So here's our contact information. There's my phone number. You can reach out to us on Twitter at MLB2CFP, Facebook at MLB2CFP, LinkedIn, Kevin Thompson, my name, and of course on YouTube. Subscribe to our YouTube channel at 9iCap, and this video will be on the YouTube channel near the end of the day. I hope this was a valuable use of your time. I appreciate each and every one of you for joining us today. Again, there's a lot in front of you right now in regards to the policy. Policy will not determine the direction of your business if you stay informed. Thank you guys for listening. Stay humble, stay safe. We'll see you again soon.